Hey guys, it is Julie here with TipRanks. Today we're taking a look at 3 strong buy dividend kings and aristocrats. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at 3 dividend kings and an aristocrat. Now a dividend king is a company that has been paying and increasing its dividend for at least 50 years. And an aristocrat is of the same but for 25 years. So both have some amazing consistency which we love to see with a dividend stock. On top of that, these 3 stocks also have a strong buy consensus from Wall Street analysts, and they have some pretty bullish price targets for the year ahead. So we're going to take a look at these companies, what it is that they do, and how the Wall Street analysts are all weighing in. Of course, we'll be doing this on the TipRanks platform. You can download the TipRanks mobile app by using the link in the descriptions down below. Now let's jump right into these 3 strong buy dividend stocks. First up is a newcomer to the Dividend Kings list with Becton Dickinson. Trading under the ticker BDX, their stock is priced at $264 per share. The stock is up about 7% over this past year and has seen some solid growth this past quarter. Becton Dickinson is a medical technology company selling a variety of medical devices to both medical institutions and the public. They are a leader in their industry, developing, manufacturing, and selling medical devices, laboratory equipment, and diagnostic products worldwide. They have over 31,000 active patents and deliver 37 billion devices a year. Their company is segmented into 3 different business units, with BD Interventional, which focuses on developing innovative surgical, endovascular, urological, and critical care interventions, BD Medical, that focuses on reducing the spread of infection and enhancing diabetes treatments, and BD Life Sciences, that delivers innovative solutions from discovery to diagnosis. As I mentioned before, Becton Dickinson is a newcomer to the Dividend King list. They just passed that 50-year mark. They pay a quarterly dividend of 91 cents per share for a dividend yield of 1.34% and a healthy payout ratio at about 30%. Their next ex-dividend date is coming up next month on June 8th for payment on June 30th. And we are just coming up on their next earnings report. It is due out before the market opens on May 4th. For their Q2, analysts will be anticipating earnings per share of $2.74, and the company has a really solid track record of exceeding analyst expectations. Their stock is currently rated a unanimous strong buy with 6 current analyst ratings and 4 of those coming in just this last month. Their average price target comes in at $294 per share, which would be growth potential of 11.5% from current prices. Taking a look at our detailed list, a few of those ratings coming in this last month, ranging from an upside of 4% all the way to 20%, and I'm sure we'll see more analysts update their price target following their earnings. Our second dividend king is Cisco. Their stock trades under the ticker SYY, currently priced at about $75 per share. Now, they have had some ups and downs this past year, but as things have started to settle out the last 6 months and are fairly flat the last quarter. Founded back in 1969, today Cisco is the largest food distributor in the United States. They have a range of customers, from restaurants, healthcare facilities, and offices to just name a few. The company has over 700,000 different customers' locations with over 71,000 colleagues across the globe. Their robust international network supports customers in 90 different countries across the world. Their businesses are encompassed into 4 groups with their broadline, specialty companies, international, and Sigma. They have been paying a dividend since they went public back in 1970. Their current dividend is 50 cents per share on a quarterly basis for a dividend yield of 2.53% and a payout ratio of about 54%. The next ex-dividend date will be on July 6th for payment on July 28th. Cisco just reported their latest earnings report yesterday, and while they did come out with a slight earnings miss, they did beat on revenue. They reported Q3 earnings per share of 90 cents, missing expectations by 2 cents per share. But on the sales side, they did have $18.9 billion, which grew over 11% year over year, and $3.4 billion in gross profit. Their CFO commented that their solid financial results for the third quarter included gross profit growth outpacing operating expense growth, which drove meaningful operating leverage and allowed them to deliver another record quarter of adjusted operating income. Their free cash flow more than doubled to $980 million year to date. And of course, following this earnings report, we had plenty of Wall Street analysts reiterating price targets. Now, overall, the stock does come in as a strong buy. We did have a few that were lowering price targets, though. The 14 current ratings break down to 11 buys and 3 holds, with an average upside of 17% or a price target of $88. And we can see all of those price targets that came in just within this last day. Now on the low end, we do have a hold at 7.5%, but many above 10%, going all the way up to 19%. Now, our third company is a dividend aristocrat, but they are getting dangerously close to king status with 46 years of dividend increases. That is the Golden Arch company, McDonald's. Trading under the McD ticker, they're currently priced at $296 per share. The company has seen some steady growth this past year and 12% up in the last quarter. McDonald's is one of those companies that needs very little to no introduction, as they are the world's leading fast food chain. With over 68 million people fed daily, they currently have 38,000 locations around the world and counting. They paid their very first dividend back in 1976. And currently pay a quarterly dividend of $1.52 for a dividend yield of 1.96%. Now, their last ex-dividend date was back in February, so the next one should be declared here fairly soon. They recently came out with both an earnings and revenue beat on April 25th. Q1 earnings per share of $2.63 outpaced estimates by 30 cents per share, while revenue of $5.9 billion beat by $320 million. Their CEO and president commented that our strong first quarter results demonstrate that our accelerating the arches strategy is working, as comparable sales grew over 12% through a healthy balance sheet of strategic menu price increases and positive traffic growth. And of course, with a new earnings report comes plenty of new price targets. Overall, the McDonald's stock has 28 analyst ratings, with majority of those coming within the last couple of weeks. They come in as a strong buy based on 24 buy ratings and 4 holds. The average price target is $317, which would be an upside of 7% from current prices. And you can see a huge list of these new buy ratings coming in here. Now, we do have one with a downside of 4% that it has since surpassed, and many right around that 10% upside. So there we have 2 dividend kings and 1 dividend aristocrat, all coming in with a strong buy consensus from analysts. Let me know your thoughts on these stocks in the comments down below. What dividend excites you the most, and which stock do you think has the best long-term potential? I always appreciate hearing from you guys. Please always keep in mind these videos are never a suggestion to buy or sell any specific stock. They're just meant to kickstart some ideas, but always make sure you do your own research and due diligence before making any investment decision, and stick to your own investing plan. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.